Hey there, E-mini Minders. This is Trader Tim from E-mini Mind doing a trade recap video for Thursday, September 19th, 2019. And right off the bat, today was a much more technical day than we've seen in quite a while. The first thing that you may or may not have noticed, but we had an unfilled gap back here on the 29th. On my market profile, I jot down all of the unfilled gaps because at some point we're going to come back and fill them. And we came today right at the top of the first hour's range. We came up and filled that gap. And then later in the day, if I go to a 30-minute chart, we came down right here and filled the gap up from this morning. And immediately after doing that, had a pretty solid bounce. And closing those gaps, coming down to a gap fill and then bouncing, those are good signs of a healthier, more day tradable market. And then if we compare, let's just take the first 15 minutes of today, and we can see, okay, we started this uptrend. If we draw up the halfway back of the day, we see we did get a little bit of a bounce there, and then we sold off and broke down, traded it short, and then traded to the negative 23% target right to it. That's a pretty clean open. And if we go to, let's go to Tuesday. That was just a crapshoot. Tuesday is right here. If you go Tuesday morning, that's what Tuesday morning looked like, and pretty much what Monday looked like as well. You start drawing up these retracements, and you just, back and forth, break the 61.8, break the 61.8. Here we had a little bit of holding resistance, and then, but just looking at the chart, I mean, a much messier open, just right in the first 15 minutes. So today was a much better day for day trading than we've had in the past. And that's usually what we see after these Fed announcements. So what I ended up doing today, because every single day is going to start in a lot of ways the same in terms of, okay, 30 minutes are going to go by, I'm going to mark the high and the low, and we're going to have some trade in the middle of that. Well, what I like to do is look at what does the trend look like? Is there a trend within that range? Because after 20 or 30 minutes, you can glean a lot of information, but just because we didn't break out of the range immediately at 7:01 or 31 minutes after the opening bell doesn't mean that we're in a range-bound day. So if I look at this morning, we can see that within the first 30 minutes, we're sort of putting in higher lows, and we have a decent move in one direction, and then a pullback that traded twice in the down direction. So there's some structure here, some trending going on. When I drew up the high to low short and that failed, then I drew up this low to high here, and 1725 was the entry. And the reason I went for that, even though we're within the first 30-minute range, is because the market appeared to have a little more trending action. And on the daily chart, gapping up slightly above this hammer, I saw that as a bullish sign. Yes, we're kind of up at highs on a daily chart, but this hammer occurred after a little bit of consolidation, and we could easily go another 100, 200 points without major resistance. So I saw that as a buying opportunity this morning. That had a pretty strong push right away. If you didn't take the first one, then let's pretend that you didn't take the 3017 and you watch this go pretty strongly up. Well, drawing up the next retracement from lows to highs, gives you a long that's just below the top of the first 30-minute range. So expecting that to be support by rounding up to 1950 and adding a tick, 1975, that pretty much puts you right on top of the first 30-minute range. And that was also a reliable setup and a good one. Then, if we draw up the next setup, you see we got a little bit of a bounce, but right before that we had this double top, and it didn't correspond with a high tick. You'll actually notice the ticks here drifting down all day. That was noteworthy, even though the breadth and advanced decline line in the morning were somewhat bullish. But it didn't really set up in a short because the long traded first. So I wasn't able to take this as a short because we had stopped at the long, and at this point I was still in the long, so I had to wait for the short to break. And or the long to break, excuse me. So once we got a little bit further, we then did dip in to the first 30-minute range just a touch, and that corresponded. So this was the first long setup, and then here's the second one, and then here's the third one. And then when we broke that one, I just drew the full halfway back from where the series started. And that one stopped at the long, so that means I had to pass on the short. Once the short broke, I drew up. So I did a couple things here. I drew up the short like this, and because we didn't touch the short yet, like we bounced off of this long and didn't touch the short, I drew up this long like this and took another took a 1975 long. If we had touched the short, then I wouldn't have been able to take this, but because we rallied, I realized there wasn't a swing high on the way down to break, but this was a pretty big level in terms of the retracement here is a bigger retracement. Like this would be visible on a 15-minute chart. And so I, being the Thursday after the Fed and having already that winner in the bank, I decided to go for a little long here. And then we ended up, because at this point I'm still thinking, okay, we haven't filled the gap from yesterday, so might as well just ride the wave and see how long we can go in this uptrend. And so that went up, and then we kind of went straight up here, and I got a little aggressive, trailed each of these candles as we started going really quickly up here, and then got taken out, and then we fell back down pretty much as fast as we went up. I thought that was a little bit interesting to have a kind of an upside down V. We do have a head and shoulders here, and then once we fell into the first 30-minute range again, this horizontal line, or the high and the low of the first 30-minute range, we went straight to the bottom of the range, and there wasn't really a good short setup in there, and at that point I had already closed down for the day, and then we kind of drifted below. The afternoon was a little bit funky, but you can see the nice channel that had formed in the afternoon. So that was good and what I would consider a pretty technical trend down. So where are we at? Well, we've ended with opposing tails. One tail today, inverted hammer, and then yesterday the hammer. So we'll see what tomorrow brings. It is an expiration day. Those are usually up days, but what a day usually is doesn't necessarily give us a whole lot of actionable day trading opportunities. So we'll see what tomorrow brings, and then next week, how these next couple days develop, as I've been saying, should lead us into the trend for the fall. So if you want to check out or follow along live each week with the trading room. You can do that eminimind.com/VIP. I hope everyone has a great weekend and a happy Friday of trading.